History books won't remember 2025 as the moment everything collapsed. They'll remember it as the moment the lies finally stopped working. For 50 years, we've been living in a fantasy where everyone pretended the US dollar, gold, and Bitcoin could all play nice together in your investment portfolio. Your financial advisor probably told you, dollars keep you safe, gold protects you when things go wrong, and Bitcoin? That's just gambling money. Each one had its little box, its special purpose. But over the past year, that neat little story has completely fallen apart. What we're watching now isn't smart investing. We're watching a fight to the death. The dollar, gold, and Bitcoin aren't friends anymore. They're three completely different belief systems, and they all battling for control of something that's running out fast, your trust in the system. And here's the crazy part that nobody on Wall Street saw coming back in 2020. The dollar, the so-called king of the mountain, is walking into this fight like a champion. It's stumbling in like an old boxer drowning in debt, desperately trying to rewrite the rules just to survive another round. To really get why this battle is exploding right now, you need to understand something insane that happened to America at the end of 2024, for the first time ever. The United States is spending more money just paying interest on its debt than it spends on its entire military. Let that sink in. The government is blowing more cash cleaning up yesterday's mess than it is protecting tomorrow. When the global bond market saw this number, something broke in their minds. See, for decades, countries kept buying dollars because even though it wasn't perfect, it was still the best option out there. Europe couldn't get its act together, Japan was too old, and China's government controls everything. America seemed like the only engine still running strong. But here's the thing, when you're borrowing money just to pay back the money you already borrowed, you've entered what's called a debt spiral. The dollar isn't backed by American workers being productive anymore. It's backed by the Federal Reserve's ability to print more paper. And when the big players' sovereign wealth funds, central banks, massive family fortunes figured this out, everything changed. They did the math and realized the dollar is actually losing value every single day. When inflation runs at 5%, but your bond only pays 4%, you're guaranteed to get poorer. The dollar stopped being something you save and became something you only use to buy stuff. You need it for transactions, but you're terrified to hold on to it for too long. This is what experts call hot potato money. Everyone's passing it around faster and faster because nobody wants to be the sucker holding it when everything crashes. This mass exodus from the dollar has sent people running toward the only two assets that have zero risk of being watered down: gold and Bitcoin. Gold, that ancient king of wealth, has woken up from its long sleep, and it's moving so aggressively that even the supercomputers on Wall Street can't figure it out. For 40 years, gold followed a simple pattern with interest rates. Rates go up, gold goes down. That was the rule everyone trusted. But in 2025, that rule completely shattered. Interest rates stayed high, yet gold exploded to record highs. Why? Because the market stopped caring about missing out on interest payments and started worrying about whether their dollars would even exist tomorrow. The people buying gold now aren't watching late-night TV commercials. They're the central banks of countries across the developing world. China, India, Turkey, Poland, Singapore, they're buying gold like their lives depend on it. And honestly, they kind of do. They're not trying to get rich. They're trying to protect their country's independence. They watched what America did to Russia's dollar reserves back in 2022, and they learned a harsh lesson. The dollar is a weapon, not just money. Gold is the only neutral territory that can't be sanctioned, frozen, or deleted with one click from Washington. At the same time, Bitcoin has completely transformed from a risky tech bet into a serious protection against collapse. The change in how people talk about Bitcoin in 2025 has been absolutely wild. For 10 years, critics said Bitcoin was too unstable to be real money. They called it a toy for degenerates. But when American banks started shaking and the bond market froze up, Bitcoin did exactly what its creator designed it to do. It became the escape pod. Big corporations looked at their massive cash reserves losing value every single day and started copying MicroStrategy's playbook, converting their money from dollars into Bitcoin. They realized sitting on cash was killing them. Switching to Bitcoin was saving them. This corporate panic created a supply crisis. Only 21 million Bitcoin will ever exist, and millions are already lost forever. When the finance chiefs at Fortune 500 companies start fighting over the tiny amount left, prices go absolutely vertical. Bitcoin isn't competing with PayPal or Visa anymore. It's competing directly with U.S. Treasury bills, and it's winning because it offers something Treasury bills can never match: mathematical certainty. They can never print more Bitcoin to solve a crisis. They can never bail someone out by diluting what you own. This three-way war is now playing out on the world stage between nations. The U.S. government has boxed itself into an impossible corner. They want the dollar to stay on top so they can keep borrowing money. But to make people want dollars, they need to offer high interest rates. The problem? High interest rates are bankrupting the government and destroying banks. If they drop rates to save the banks, the dollar gets crushed by gold and Bitcoin. If they keep rates high to save the dollar, the economy collapses and tax money disappears. They're stuck. This impossible situation is fueling everything happening in 2025. Every time the Federal Reserve makes an announcement, the market isn't listening to their inflation talk. They're watching the scoreboard between these three fighters. What makes this exact moment in time so explosive is that gold and Bitcoin supporters are starting to team up. For years, gold people hated Bitcoin people, and Bitcoin people made fun of gold people. They were fighting over the same anti-dollar crowd. But in 2025, they've called a truce. Smart investors are realizing gold and Bitcoin are like the Air Force and ground troops of the same army. Gold is the deep, heavy, defensive fortress held by governments. Bitcoin is the fast, portable, digital attack weapon held by individuals and companies. Together, they're crushing the dollar from both directions. When a billionaire borrows money against their Bitcoin to buy physical gold, they're basically betting against the dollar twice. This strategy is becoming the standard move for the ultra-rich. They're completely leaving the dollar system behind, living on borrowed dollars while stockpiling real, hard assets. The dollar only looks strong because every other government currency looks even worse. Yeah, the dollar looks good next to the euro or yen, but that's only because Europe and Japan are in deeper trouble. This is relative strength, not actual strength. It's like being the nicest house in a terrible neighborhood. The real battle isn't happening in currency markets. It's happening in commodities. When you measure oil in gold terms, oil is cheap. When you measure housing in Bitcoin terms, housing is crashing. It's only when you price everything in dollars that it all looks expensive. This fake picture is finally being exposed. Regular people are furious, not because they understand fancy economic theory, but because they feel the robbery happening. They're working harder than ever but can afford less and less. They see the stock market hitting record highs while they can't even dream of buying a house. They're starting to sense that the measuring stick itself, the dollar, is completely broken. When the public loses faith in money, that's the most dangerous phase any currency can enter. Money only works because we all agree it works. It has value because we collectively believe it has value. Once that belief cracks, once the grocery store owner prefers gold coins or the freelancer wants Bitcoin instead of a bank transfer, the psychology of hyperinflation kicks in. In 2025, we're seeing the cracks spreading. The rise of modern bartering, people using stablecoins instead of banks, hoarding physical gold and silver, these are all signs that regular people are preparing for life after the dollar dies. The government sees this happening. That's why their attacks on Bitcoin have shifted from calling it just a scam to calling it a threat to national security. You don't label a scam as a national security threat. You only use that language for a rival superpower. They've accidentally admitted that Bitcoin is real money and that it's beating them. The stage is set for impact. The unstoppable force of government spending is about to hit the immovable wall of limited hard assets. The dollar must keep printing to survive. Gold and Bitcoin physically cannot print more. In a closed system, the math tells you exactly how this ends. The only question is timing. How long can the U.S. government use its regulatory muscle, media control, and global influence to hold down the price of its competitors? How long can they keep that beach ball underwater? 2025 is the year their arms finally give out. The beach ball is shooting up, and the explosion of value into gold and Bitcoin isn't a bubble. It's the market finally pricing the dollar at what it's really worth: nothing. The first victim of this financial war was honest price discovery. In a normal market, an asset's price comes from supply meeting demand. But in 2025's landscape, we're seeing something totally new, a split between paper prices and physical reality. This has never happened in economic history. You can see this most clearly in gold, which has basically split into two separate universes. In New York and London, traders buy and sell paper gold futures contracts and ETFs that represent a promise to give you gold that might not actually exist. This market is insanely leveraged, often trading 100 ounces on paper for every single real ounce sitting in a vault. For decades, this leverage let Western banks keep gold prices low by meeting demand with infinite paper promises. But in 2025, the Shanghai players broke the game. The Shanghai Gold Exchange works on actual delivery. If you buy gold there, you're expected to physically take the metal home. As BRICS countries sped up their move away from dollars, they stopped playing the paper game. They started draining actual gold from Western vaults, taking the bars and leaving the worthless paper behind. This created a delivery squeeze. Physical gold bars in Shanghai or Dubai started trading way higher than the official price showing on New York screens. This price gap screamed a terrifying truth to anyone paying attention. The Western financial system is running a scam on the world's most important asset. When the music stops, there are way more ownership claims than actual gold bars. The bank run on vaults has begun not by regular people, but by entire countries who know that during a debt crisis, having it in your hands is everything. While gold battles over physical scarcity, Bitcoin is fighting the war between Wall Street control and personal freedom. When BlackRock and Fidelity got approval for spot Bitcoin ETFs, crypto fans celebrated it as a win, but 2025 exposed it as a trap. By absorbing millions of coins into centralized regulated custodians, Wall Street effectively created paper Bitcoin. Most new Bitcoin investors don't actually control their own coins. They hold an IOU in a brokerage account. This lets the financial system do to Bitcoin exactly what they did to gold: rehypothecate it. They lend it out, short it, and build derivatives on top of it to kill the volatility. Wall Street accepting Bitcoin wasn't about embracing its philosophy, it was about destroying its power. But Bitcoin has a defense that gold doesn't: verifiable scarcity. You can't print more Bitcoin when someone needs it. You can't fake the blockchain records. This has created a split in the crypto world. On one side, you've got regulated whales holding paper claims in New York. On the other, you've got sovereign individuals in free countries like El Salvador and Bhutan holding their own private keys. The clash between these groups is triggering a supply shortage of biblical scale. While the paper Bitcoin market tries to suppress prices, real Bitcoin holders are pulling their coins off exchanges, shrinking available supply to historic lows. It's a game of musical chairs where the number of chairs is mathematically locked by code, while the number of players multiplies exponentially. The empire, realizing it's losing control of both the physical layer, gold, and the digital layer, Bitcoin, has launched its final attack, Operation Chokepoint 2.0. The plan is simple: if you can't kill the asset, kill the bridge to reach it. Regulators in America and Europe have coordinated an assault on the entry and exit points. Banks are quietly being threatened with audits if they work with crypto companies. Payment processors are blocking transactions to gold dealers. The goal is creating a walled prison where your money is trapped inside the dollar system. They're remaking it super easy to buy an ETF, which they control, but nearly impossible to buy real Bitcoin or real gold, which they don't control. They want you to have price exposure without actual ownership. They want you rich on a screen but powerless in reality. This regulatory siege is setting up the endgame: central bank digital currencies, CBDCs. The Federal Reserve and European Central Bank are racing to launch their digital tokens, not to make payments better, but to slam the exit doors shut. CBDC is the anti-Bitcoin. It's programmable, spyable, and censorable. In 2025, the messaging shifted from CBDCs are more efficient to CBDCs keep you safe. They reselling the digital dollar as your only protection in a world of cyber attacks and bank failures. But read the fine print and you'll see the trap. CBDCs allow negative interest rates. They can take money straight out of your account to force you to spend. They allow expiration dates money that literally disappears if you don't use it fast enough. And most scary of all, they allow wallet freezing, the power to shut off your ability to buy or sell anything with one keystroke. So the 2025 showdown isn't just about which investment goes up. It's a war over the future of human freedom. The dollar represents total surveillance, a system where your ability to survive depends on obeying the state. Gold represents the bunker, an analog shield that protects wealth by unplugging from the grid. Bitcoin represents the portal, a digital weapon that lets wealth teleport through prison walls. People are being forced to pick a side. The middle class, mostly asleep, is drifting into the CBDC trap. The wealthy are building gold bunkers. The tech-savvy and the desperate are manning Bitcoin portals. The separation is accelerating. Official inflation might say 4%, but gold and Bitcoin are rising 20% or 30%. This is the market screaming that the dollar is dying. The government will try blocking the exits. They'll try taxing gains at 80%. They'll try confiscating the gold. But the genie escaped the bottle. The technology of freedom has outrun the technology of control. The final outcome of 2025's showdown comes down to something economists call tiers. Law. You've probably heard of Gresham's law, which says bad money pushes out good money. This explains why for 50 years, people spent their dollars, bad money, and saved their gold, good money. But tier law is the opposite. It says good money pushes out bad money once people refuse to accept the bad money anymore. We're living through this reversal right now. In Argentina, Venezuela, and now increasingly in developed countries, sellers and landlords are quietly signaling they prefer literally anything except their dying national currency. When a real estate deal in Miami or London gets settled in Bitcoin or gold-backed tokens, even if legally recorded in dollars, tier law is active. The market is rejecting government paper in favor of people's assets. This shift demands a total reconstruction of how you manage money. The old 60-40 model, 60% stocks, 40% bonds, was built for a world where currency was stable and interest rates were positive. In our world of financial oppression, that 40% bond allocation isn't a safety net. It's a weight dragging you to the bottom. The new survival structure is the barbell strategy. On one end, you hold short-term dollar liquidity, cash, and treasury bills to cover 6 to 12 months of living costs. This isn't an investment. It's a utility token for paying taxes and buying groceries. You accept this part of your wealth is melting every day, but you pay that inflation tax for the convenience of operating in the legacy system. On the other end, you hold maximum hard assets, gold, Bitcoin, productive land. This is where your real wealth lives. There is no middle ground. You don't hold long-term bonds. You don't keep cash in savings accounts. You eliminate counterparty risk from the foundation of your net worth. The hardest change isn't financial, though. It's mental. You must stop measuring your wealth in dollars. The dollar is a shrinking ruler. If your house price goes from $500,000 to $600,000 but gold doubles, your house actually lost value in real terms. You have to reprogram your brain to measure your life in satoshis or ounces. When you look at the S&P 500 priced in gold, you discover the stock market has been flat since 1971. When you look at wages priced in Bitcoin, you realize average Americans are earning less every year. This mental shift is painful, but it's the only way to see the truth. Once you see it, you stop chasing risky 8% returns in a 10% inflation world and start chasing sovereignty assets that can't be diluted. The great wealth transfer of the 2020s won't be from baby boomers to millennials like everyone predicted. It'll be from creditors to debtors. The United States government is the biggest debtor in human history. It has every mathematical reason to destroy the currency's value to erase its debts. If you're a creditor holding bonds, savings accounts, or annuities, you're the target. If you're holding bearer assets, gold, Bitcoin, you're the winner. The government is running a controlled demolition of the dollar to save itself. They'll sacrifice savers to save the system. The showdown will probably end with a ceasefire, but not the one establishment expects. The dollar will remain the state's currency, used for taxes, fines, and fees. But gold and Bitcoin will become the economy's currency, used for savings, major transactions, and international trade. We're heading toward a two-currency world. You'll have a public wallet, see BDC dollars, for things the government can see and tax. You'll have a private vault gold Bitcoin for wealth you want to preserve for your grandchildren. The battle between these two worlds will define the economic struggle of the next decade. The government will try closing the gates between them with capital controls, exit taxes, and unrealized gains taxes. Your job is positioning yourself on the right side of that gate before they lock it. In 1971, the U.S. government cut the link between dollars and gold, starting the age of debt. In 2025, the market is cutting the link between citizens and dollars, starting the age of assets. The 50-year experiment with printed money is ending not with a whisper, but with the roar of Bitcoin mining rigs and the thud of gold bars hitting the table. This showdown was never a fair fight from the start. Paper always burns, gold always shines, and code always executes. The winner was decided the second they printed the first dollar without any real backing. Now we're just watching reality catch up to the scoreboard.